How optimistic are you that we can navigate some sort of soft landing, some sort of cooling of the economy by the Federal Reserve?
Well, the data that we saw come out today that you were just referencing underscores the continuing resilience of the American economy. On the PMI side, you just spoke to, but also on the labor market, that we saw unemployment insurance claims, and now the number of people collecting unemployment insurance down to 50-year lows. We have a very strong labor market and a resilient economy. At the same time, we face real challenges. On the prices side, the Federal Reserve is acting independently and appropriately. And we are dealing with the impact of the global supply impact of the war in Ukraine. And so these are all issues that create risks. But the one thing that we can say confidently is that the United States economy right now is uniquely well positioned to navigate through these challenges because of the strength of the underlying growth, both at the macro level and in the labor market.
You mentioned Ukraine. What changes to the inputs in your economic models are you doing, given the Ukraine and some of the additional supply chain disruptions?
Well, we've seen a direct impact on energy prices. We've seen oil prices increase because of Putin's invasion and the supply impact that that's having on Russian oil getting into the market. And that has a direct impact on gas prices. We've seen gas prices are up about $1 as a result of Putin's actions. And so that has an impact. We were also looking at other commodities, wheat, as well as some of the metals that you were referencing earlier. In terms of direct impact in trading relationships, Russia is a minor player with the U.S. economy. And so the big question is on the energy side. But we are more resilient and we are fortunate in that we are more resilient and less exposed than certainly our European counterparts and many others around the world.
And Brian, I want to go back to the labor market because you mentioned its strength, and we saw that again with the jobless claims this morning. But we know inflation is extremely hot. We know it's probably going to get hotter. How worried is the administration that that's going to undercut some of the strength and the recovery that we've seen in the labor market?
Well, there's always risk, but what I'd say in terms of the actual data is we're seeing striking resilience in this labor market recovery, not only in the unemployment insurance claims, but in the share of the prime age population that is getting back to work. This is the only modern recovery that we've seen where that the employed to population ratio actually increases significantly over the course of a recovery. So we have real momentum there. And so the challenge, as you say, is how do we get to a place where we see those prices moderating across time? And I think we're seeing some indications of that, certainly as this COVID surge recedes. We are seeing in survey data sort of record highs in terms of people's comfort level to get back out into the services side, which should have some downward moderation on goods demand. But these are the issues that we're going to have to watch, particularly in the context of the war in Ukraine.
And also watch how much wages have to rise in tandem with prices. Will you need to potentially have to offer some sort of protection for those in the lowest income brackets? If we do see energy prices on the rise, we see the UK under significant pressure to do more for its own population. It's agreed, energy prices are nowhere near as volatile here as they are there thus far on the consumer. But do you see a position where you might need to help the lowest income?
Well, when we look at the domestic economy, the first thing that we are focused on is how can we increase supply in the short term. We have a supply shock. We have a couple million barrels a day of oil coming off the market because of Russia, and that was already into a constrained market because the supply of oil in terms of OPEC's quotas was not keeping pace with demand. So we have to increase supply in the short term. Some of that can happen from U.S. producers, some of whom are increasing production, others who aren't. We should see more production there. There's the issue of our collective reserves, and that's an issue that is on the table for discussion, and the president will be raising with his European counterparts this week. And the issue of other oil-producing countries as well. Increasing supply is going to be what puts moderating pressure on prices in the oil market. At the same time, we are looking at ways of trying to provide some practical relief to consumers, and that's a conversation that we're having.
Federal Reserve's also having those conversations. Are you worried about faster than expected rate hikes and the impact on midterm elections?
Well, the Federal Reserve is going to conduct monetary policy independently and make those judgments with appropriate independence. What we have done is to try to nominate a really qualified slate of governors for the Board of Governors, including Chair Powell, to make those right and independent decisions. They're well in the way in the process of doing that. I'm not going to comment on the specific tactics of those decisions other than to say that they have the space and the independence to do what they need to do. Chair Powell has made clear that he intends to do that. And so we fully anticipate that will happen and that we've got enough resilience in the overall consumption growth in the United States as well as the labor market so that we can ride through this period as we have rode through Delta and Omicron and a number of different challenging periods in this recovery.
And Brian, you said that the Fed is acting independently, it's acting appropriately, but as it begins to tighten policy, are you confident that the Fed won't tighten into a recession?
Look, I don't think anybody can be 100% confident of anything at this point. We're in uncertain territory. I think that that's the task that they have in front of them, and they are. What I'm confident of is that they will do that with care and with precision and with independent judgment, and that is the best that we can expect in uncertain times. Our job, as we think about fiscal policy in the broader economic context, is to do what we can to operate on the supply side. On labor supply, get more people working with skills and training into jobs that suit them. On the supply of goods and services, continue to work to try to get these supply chain bottlenecks unstuck, and also take action where we know we have real supply constraints where we could do something about it. For example, the issue of semiconductors. We need to build more semiconductors. We need to build more semiconductors here in the United States and in supply chains that are more resilient. We know that what we need to do, there's a bill in front of Congress to get that done. So there are some concrete things that we can get done right now that would help provide businesses with more forward certainty that those supply constraints are going to get eased. That's going to be our focus as the Fed operates on its.
And Brian, the companies you're speaking to, the chip makers, the automakers, the energy providers, they all have the confidence to invest as you want to see them too?
Absolutely, and we've been meeting consistently with a number of the largest semiconductor manufacturers, but also the consumers of semiconductors. You think about automakers, and certainly that's a big issue that, car prices are a third of inflation last year and a big constraint on demand. But semiconductors are a component into everything, and so consuming companies are from our electronics companies to our appliance and consumer goods companies. Every company in the United States in some way, shape, or form is affected by the semiconductor shortage, which is why everyone has a stake in us getting this legislation passed, being able to provide the investment certainty that companies need to know that there will be a reliable U.S.-made supply of semiconductors for years and decades to come.